Today I want to discuss a few things with you, but I know my face haven't been seen in a while on YouTube because I've been out. Uh, actually, I have been working on faceless videos about financial, about investing, about precious metals, a little bit of everything with the AI. So I've been dibbling and dabbling in the AI for a minute. Okay, but one of the first things I want to talk about that I did run across today when I got up this morning is this QBTS quantum. It's D-Wave Quantum. It's a quantum computing stock in which yesterday I had already drawn it out, charted it out on the chart here. Three sections right here. Now I saw that it is in an uptrend, and right here I think it was Friday the 16th where that it almost penetrated. It tested, it almost penetrated, a little bit, but it didn't go all the way through. And that's what I was really hoping that for it to go through, for it to test and for it to penetrate, which the 19th, which was yesterday, it tested again and it penetrated. Now, overnight, which is the 20th, which is today, you can see a large gap up, which this stock went up to a little bit 1755. It gapped up, a big gap up. So now this gap right here, this would be a good buying spot, or I had already charted out two other buying spots down here in this area of the $6.97 between $6.20. Then I did another area right here at $7.02 and $7.80, because those are little small gap ups, which this was a big gap up, overnight gap up. So this is how D-Wave is looking right now, which is looking pretty good, which I looked at it as saying that with D-Wave, I bought 155 shares at $6.38, which I only invested $988, but right now I'm at 159% in the red at $1,574. So if I sold this stock tomorrow, if it stay where it's at, that's what I would make on this play right here at 159%. So with that being said, you know, I want to talk about one other thing. Matter of fact, a couple other things. I want to go into the precious metals. Hey, the precious metals, y'all. The precious metals. And one thing about precious metal is still is an investment. You know, it's still a way for you to make your money. Let me look at some holdings right here. And like I said, I don't mind showing my numbers. At this point, I don't mind showing it because I'm just showing you how I'm making money. I'm not trying to build wealth. If wealth come along, fine. That's all good. But I'm trying to stack paper at this moment, which 3 years ago, I opened this little precious metal portfolio. As a matter of fact, it's a place called Amex, which I opened it up. I got gold and silver in this account, which I started out with an initial investment of $10,706.56. Now, over 3 years, this account has grown over $5,051 over 3 years. That's how much this account has grown. So, like I say, it's not about being rich, but it's about just stacking your paper. If you stack your paper, now I was taught in Trading Academy, which that's where I learned a lot of things that I'm doing right now. I did go to school in the Trading Academy, but the thing is about it, I did learn, and they taught us if you only made $1, that you was in the green $1, you had a good day. If you was in the green for $1, you did have a good day. So that's the way I look at it. I mean, you can't look at your losses. You got to look at your average of your wins. You might look at one loss and you say, well, I lost $2,000, but then again you won you won 3,000, so you still came in the green 1,000. You dig? So that's the best way to look about investing. Another thing that I'm going to look at now, I'm going to look at this Tempus AI. Let me move this out the way right here. This is an option, which is this option Tempus AI, which is a medical stock. I have an expiration date on this of January the 16th of 26. Some people might say 26. That's 25. Yeah, this I still have 242 days on this expiration date. So, and the reason I did this is because to try to give it time for the new administration, the presidential administration, to get its stuff together, move around, or whatever. You know, I tried to give it time. So that's why I picked this date here. But like I say, a lot of the financial gurus, you know, I got a $20 call, and they telling you a lot about calls and puts, about options. But one thing I'm going to say about options, you can make money and you can lose a lot of money. If you don't pick your options correctly, because some of the information that some of these financial gurus and stock market gurus with these clubs, the information that I'm listening to them, they only giving you enough information to think that you know what you're doing. But you don't have enough to know. You know, it's sort of like the Dunning effect. I think they call it the Dunning effect. The Dunning-Kruger effect is where you know enough to think you're right, but you don't know enough to know that you're wrong. And a lot of these gurus are giving you just enough information for you to go out there and do something stupid and lose a big amount of money. So, because a lot of them, they are not mentioning things like your premiums, what you're paying for your premium, whether you pick this stock within the money, out the money, or at the money. That when you do pick these expiration dates, when you pick expiration dates, the closer the expiration dates, the farther away the expiration dates, the less they cost. You dig? The less they cost. The closer to that expiration deals to that, the more that is going to cost, that premium. They don't talk about this right here called open interest. It's 3,112 open interest on this stock right here. The things that these are some of the things that they really don't teach you. You know, but I guess they want you to pay for it. I guess all the information that they're giving you is just complete crap. But anyway, this option is a call. They got a $20 strike price on it, in which that means that I want that money to stay up above $20, in which on this particular stock right now, Tempus AI, the last price that I saw was $63.67, which today's high was $62.52, between and $65.30. And that's another thing that you have to look at when you're picking strike prices, which I will go back here, and you got to look at these lows and say, if I did a call option, look at this low right here. So you say, well, I think I might pick my strike price at a $4.50 strike price if I'm going to do a call, and hoping. Now this right here will be perfect for a call for $4.50 on this option right here. It would be perfect, because this stock right here, the crawl, when I bought it, like I said, when I bought it at $6.38, if I'm not mistaken, so it have reached all the way up to $17. It have doubled from what I paid for it, over doubled for what I paid for it. Okay, so like I say, this right here, a lot of the gurus, they just not telling you the whole stories. And I'm here to inform you the whole story, trying to save you a little money, trying to save you, because like I say, I'm not trying to get you to join a club for me, because I don't have a club. I'm an individual. You know what I'm saying? I roll by myself. I don't need a club. I stack my money, and I don't need other people to help me stack my money. You know, I don't need it. I don't roll that way. I give out free game. You know, I give out free game to the people. But like I say, this is just a little. This is only one contract right here. Its value is $4,260. I don't mind showing my numbers. I don't mind showing some of my numbers. It's no big deal with me. But like I say, I just wanted to put that out there, and hopefully you guys will like, subscribe, and share this video. And then also go to my website at www.targetzone.biz/, which this is Target Zone, what you're listening to right now. This is my trademark. This is the name of my company, Target Zone, and that's the name of my website. If you go to that, targetzone.biz/, and that's my website. If you want to see other investment videos that I have besides what's on YouTube, you can again go to my website. And then also I have apparel on my website, and then also at the same time, I'm getting ready to I'm coming out with a book here. It's on its way. Matter of fact, is getting ready. They're getting ready. This is just a transcript of it right here, but it's coming out on Ingram Spark. Ingram Spark. That is a publishing, and then it also will be on Kindle also. So just giving you guys a heads up, and it will be also advertised on my website. So guys, with all that being said, be safe, be smart with your money. Watch out for these scammers, these people out here that think that they trying to tell you that they trying to put you on top of game. But see, the game is game. That's the game. It's like a pyramid. That's the game right there. It's like a pyramid that I'm gonna tell you how to make this money. But the thing is about it, for you to join my club, you have to me to make money. It's just, you know, pyramid. That's basically what it is. But like I said, I'm gonna leave y'all with that information. Y'all be safe. Love you guys, and peace.
Hey there, investors. Welcome back to my channel. Today, we're diving into the world of call options and how you can use them to potentially boost your profits in the stock market. So, let's get started. Imagine this. You believe that the stock of company XYZ, which is currently trading at $50 per share, will increase in price over the next month. To capitalize on this potential rise, you decide to buy a call option. But what exactly is a call option, and how does it work? Let's break it down. A call option gives you the right, but not the obligation, to buy a stock at a specified price, known as the strike price, within a certain period. In our example, you buy a call option with a strike price of $55 and an expiration date 1 month from now. The premium or cost of this call option is $2 per share. Here's how it unfolds step by step. You pay the $2 premium per share to purchase the call option. Since options are typically sold in contracts of 100 shares, your total cost is $200. Over the next month, you closely monitor the stock price of company XYZ. Suppose the stock price of company XYZ rises to $60. Since the stock price is now higher than the strike price of $55, you can exercise your call option. You buy 100 shares of company XYZ at the strike price of $55 per share, costing you $5,500 in total. You immediately sell the shares at the current market price of $60 per share, receiving $6,000 in total. To determine your profit, subtract the total cost of the premium, which is $200, and the cost of buying the shares, which is $5,500, from the amount received from selling the shares, which is $6,000. Your profits are $6,000 in sale proceeds, minus $5,500 for the cost of buying shares, and minus $200 for the premium, which equals $300. In this example, buying the call option allowed you to profit from the increase in the stock price without having to own the stock itself. Options can be powerful tools for investors, providing flexibility and opportunities to leverage market movements. However, it's crucial to remember that options trading comes with risks, and it's essential to thoroughly understand these financial instruments and their implications before diving in. Seek advice from financial professionals, and conduct thorough research to make informed decisions. Thanks for watching. If you found this video helpful, make sure to give it a thumbs up and subscribe for more investing tips and tutorials. Happy investing!